What's going on, everybody, and welcome back to yet another video. In today's video, I want to share with you guys a simple scalping strategy that I like to use when trading futures. But real quick, as always, if you guys do find value in today's video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, so with this strategy, what we want to do is we want to mark the first 30 minutes of market open. So the first 30 minutes of market open is going to be 9:30 a.m. EST to 10 a.m. EST. So as soon as the market opens, that is going to be our 9:30 candle. And I'm just going to draw this line through it right here. Now, once the 10 a.m. candle closes, which is going to be right here, this is going to be the range that we want to watch. Now, what I will do is I will mark the low of that first 30 minutes and I will mark the high of that first 30 minutes. Now, today did not play out. We had a huge gap up in the overall market followed by CPI. So I'll show you guys examples where it actually works out. But again, what we want to do is we want to mark the high and the low of the first 30 minutes of market open. Now, typically what we are going to look for from here is for price to either break above the opening range or for price to break below the opening range. Now, if price were to break above the opening range, we are then looking for price to close above that area and then later pull back and test the high of that first 30 minutes. Now, when we get that pullback, we are going to look for price to make this area support. If price can make this area support, confirming it with bullish price action and bullish volume, we will then look for a long entry to take price higher with a stop loss set right below this high point right here. Now, on the flip side, if price were to break below the opening range, we are looking for weakness below that level, but then later for price to come back up, test that area, make it resistant. So we're looking for bearish price action, bearish volume, to look for a short entry to take price lower with a stop loss set right above this lower range right here. So it's a pretty simple strategy. Let's go back and look at some scenarios where this played out. All right, so looking at this example right here, here's the high of the first 30 minutes and here is the low of the first 30 minutes. Now, as we can see, when price broke below this area, it never gave any reason to go short. We never want to go short just because we're hitting a level, and we never want to go long just because we're hitting a level. We always want confirmation behind it. So there was no reason to short. We broke below, very quickly reclaimed it. When we tested it, there was no reason to go short, no bearish price action, no bearish volume, eventually broke below it again. But again, really no reason to go short. However, a little later, we broke above that opening range right there. And then we came back and we retested it with a very bullish candle. Now, if we put on the volume as well, even on the retest of the level with the volume on, you can still see that there was an elevation in the volume representing that buyers were present at this area. So as a result, that would confirm a long entry with a stop set right below here. Now, if you were to take this trade, this is exactly what you would be looking at. Price pulls back, it tests it, it makes it support, and we get the confirmation to go long. And real quick, if you're finding value and you want to learn directly from me for the rest of your life, get access to live trading with me forever, access to in-person events with me and Team Bull, access to my swing trading course, both of my trading books, and so much more, I am running another mentorship program. So if you want more details about that, make sure to check out the link down in the description, set up a call with me and my team, and you'll be receiving more details on that phone call. This is how your trade would look. You would be looking to go long at the close of that candle, stop loss below that lower wick right there. Your potential price target, is essentially infinite. And you can see from there that price was very quick to make a very large and aggressive move higher. Let's go look at some other scenarios. Even here was decent for a scalp to the downside. So as you can see, we have our lower 30-minute range here, upper 30-minute range right here. We kind of chopped around that level, flushed to the downside, broke below. But what did we do when price was trading below this area? We rejected it multiple times. So as a result, you would be looking to get short with a stop right above here. Maybe you got a trim and then stopped out the rest break even. Or even if you did decide to go long right here because price was holding above that area and we did have these long lower wicks, then guess what? You simply just stopped out of the trade. No strategy is going to be 100%. Here's another scenario right here. High of the first 30 minutes, low of the first 30 minutes. Price breaks above, comes back, retest it, bullish price action right off the level. As a result, you're looking to get long at the close of this 5-minute candle right here. Your stop loss would be right below that lower wick. Again, potential reward, infinite, and then price just continued higher. Looking at one more example, here's our high of the first 30 minutes. Here's our low of the first 30 minutes. Price never actually broke below this low point right here. It was very quickly to reclaim. Never gave any reason to go short. But when price came back up and broke above that previous high point right there, look at the bullish price action, that long lower wick right off that level. If you didn't like that candle, you had another confirmation candle right there to get long. You would be getting long somewhere up there with a stop loss right below there. Potential reward is going to be infinite. And as we can see, price decided to trade higher. Now, this is a setup that I look for every single day when trading. It doesn't happen every single day, and it does not have a 100% accuracy, but it is a very high probability setup that I like to look for when trading, especially if price is not trading near any supply or demand levels. This is typically what I will look for. But that is going to wrap up this video on the 30-minute orb strategy that I really love to use when trading futures. If you guys did find value in today's video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.